Great day, everybody. Welcome to the Money Chat. I am Dr. Marrian Sista Efua, and we are here today to talk about those things that support you in reaching your goals while implementing the tools and strategies that we talk about here in the Money Plan. Now, the Money Plan is a book that I've authored that's based upon my experiences and things I've learned along the way from other financial people that have been successful financially as well as in business. And this is a time for us to have some conversations with some of those people or people that are like them to bring you about some opportunities on how to make this a reality. I want to remind everybody that you still should be saving your $6 a day. I know one young lady just texted me this morning. She said, "Sister, I almost had a moment because I thought maybe some bill bounced because I realized I had money in my bank account." Because she's been transferring money over to her savings. Mm-hmm. And so she realized she had this amount of money because she's doing the $6 plus the day of the week. So now she has a nice piece of change inside of her savings account to support her. I'm reminding everybody also, we're going to be talking to Vivian Everett today, right? This conversation today is about opportunities. Part of doing the money plan is that you're investing in opportunities. You're investing in opportunities that support you in unpacking and processing the tools that we give you in the book. So this is investing, and opportunities are definitely one of the tools that you want to let your money be able to be used as, your credit to be used as. I believe in using other people's credit and other people's money. And so Vivian is going to give us an idea of how to generate some cash that we can put in that becomes similar to that. So before we get started, I want to introduce her. Welcome to all of you that are coming in. Please make sure you share it out so we can get some more folks in this space. That would be really great if you could do that. So let's get started. So Vivian is a retired person. Can you believe that? She don't look that old, does she? But listen to this. Vivian Everett is a retired federal employee who worked for the IRS for 32 years. She has a background in collections within the IRS. However, her passion is instruction. Since retirement, Vivian has gotten her hands into several income-generating cookie jars, including affiliate marketing, network marketing, and now investing. Her newest venture is her own. It's called Whisper Wealth Investments. This is a centralized platform for all the investment opportunities that she shares. Whisper Wealth Investments provides information on opportunities such as and is a managing of its own portfolio. Wow. That includes different types of investments, including real estate. Her ultimate goal is to support and guide those who want to have a solid multiple streams of income, a passive income that allows them to live their lives financially liberated from a job. Okay. We all know what that is, right? That job, that thing that we go to every day and we complain about it, but we love it at the same time because it's given us the opportunity for us to come and take care of our daily functions. So Vivian, welcome.
Thank you. I'm really glad to be here.
Excellent. I love the name, the Whisper Wealth Investment. I like that because it is like a little whisper we get, right?
Yeah,
you got to be listening. I tell you what, when you investing, you better be listening to every whisper. You better hear every whisper if you invest in. Absolutely, positively. So Vivian, what can we expect today from the way we're going to be in this chat? What can we expect to gain from this time with you today?
Okay, so I'm just going to be giving you some information about an investment opportunity. And I'm going to provide some relevant traditional information for money growth and identify how this information can convert your passive income into residual income on a monthly basis.
Wow. Then, okay, now you got me on that passive residual income. So I got to go make sure I'm putting 2 pens by me now. When you said that part, I was like, let me grab another one just in case. I might have to highlight. I highlight that. Thank you for sharing that because that's really important. When we think about that, a lot of us think about investing in things, but we don't think about the residual passive income. Like we're not doing anything, but it's constantly coming in. It's kind of like the royalties that I get. Sometimes I'm not expecting that check, but that check comes in. You're like, whoa, I remember what I did that show. Okay. That's the benefit of it. And that's what having this wealth mindset, having this money chat is all about, is to identify new ways to visualize what we got going on. So Vivian, okay, so you're going to talk about this passive residual income. My question is, why can't I just save money? Why do I have to invest? Like what? I mean, shouldn't I just put my money in the bank and just save it? Because someone's going to ask that question. So I'm just going to put the question out there.
Well, sure. That's the norm, right? That's what we grew up hearing from our parents. You always got to have a savings account, always got to put your money in the bank. But what we didn't know as growing up is that the bank takes your money and they loan it out to other people. They trade with it. They get profit from it, but they don't give you any of it. So when you put your money in the bank, it's tantamount to actually just taking your money out in the backyard and burying it, because it's not doing anything, it's not growing. Investing, however, gives you the opportunity to take your money and have it grow on a daily or weekly or monthly basis, so that your money is working for you instead of you working so hard for your money.
And that's the way, right? Me, I'm always like, what's that button? Push the easy button. The right now easy button. Let me get the most bang for my dollar, right? That's exactly what I'm talking about. I like that idea when you talk about that. We talk about that in the psychological effects of money on Black women, how a lot of these traditional ideas are not passed down to us because we're just used to put your money in the bank, go to work, put your money in the bank, go to work, put your money in the bank. And that becomes a more of a burden, and it makes us take a longer period of time to do it. So I'm interested today about this investment that you're going to talk to us about, this whole idea of investments. Now, let me ask you something. Is it safe to invest in this thing? Is it safe to invest? Is it safe to invest in your product?
Well, I can tell you, all investments have risk. There is not an investment out there that can be guaranteed. So if you look at the investments that have failed recently, it's because they made a guarantee. You're not allowed to do that. Nothing's guaranteed in the market. The market moves, it ebbs and flows, right? So I can say about this company is that they've been in business for 4 years. They pay weekly, and they have not missed a week in 4 years. So safe, I would say so. But like I said, every investment has its risk, and so you have to move accordingly.
Gotcha. And that makes sense, right? That makes sense that we understand that there's a risk and a consequence, and sometimes that risk leads to a positive consequence, and sometimes it's not the best. I know sometimes I look at my investment portfolio and I'm like, what was I thinking? Right? What are these people thinking? But you're right. It's about being consistent. It's about doing the research. And that's what you're going to do today. You're going to explain to us a little bit more, it sounds like, about what's going on.
Yeah.
So how are you planning to invest in this? Is it usual? We're just going to buy some stocks, or are we going to use a different type of, what makes this so different in the way we're going to be investing with this program?
Well, the way this program works is that it is a money management system. And when you put your money in or take your money out, you do so in crypto. Crypto. I know people are like, oh my God,
what's crypto? Hold on now. Because they said everybody got their money out of crypto already. It's going to get their money. So now, hold on now.
I know. But let me just explain how this works. The reason why they use crypto to put money in and take money out is because it is the fastest and easiest way to do so. And it's decentralized, meaning that the government ain't looking all up in your business all the time when you're moving your money back and forth. So if you're putting you put crypto in, but once it's in the fund, it's not based on crypto. It grows based on Forex trading. And I'll explain a little bit more about that in a minute. But crypto is like, if you don't know what it is Bitcoin, Ethereum. It is, that digital money that everybody is talking about. That's going to be the future of money anyway.
Okay. Thank you for that. So I'll let you get to that later on. So basically it's just another form of currency that we're dealing with already, right? A different way of flowing currency. Okay. And I'm waiting for you. I'm interested. I want to hear about this, right? I got in the Bitcoin Bitcoin long years ago when it first came out. It was a whisper, and I got in and I got mine and I got out. I didn't get as much as everybody else, but I got a nice little section of that. So I'm interested to learn about more about this crypto investment. Now, you talked about you've been involved in this. This company pays out every week that it is using crypto. How long have you been doing this investment? If
Well,
you
I've
can
been
share,
in,
you
yeah, I
can
can
share.
share. Absolutely. Absolutely. I've been in since February. I started small because I was skeptical like everybody else, and it was at a time when crypto was going kind of heading down the path, right? And I was like, oh my God, I have this with crypto. But what I realized is once the person that I was introduced to the fund with, I trusted him. I trusted him because he's the type of person that vets things before before he even says anything about it to anybody. So he's done all the research and this, that, and the other. Of course, you want to do your own research as well. But I started out with like $920, and because that's what I had. And in
Mhm.
4.5 months, that doubled. So I took that out. And so once I realized that, okay, this is real, I started telling other people about it. And I went and actually borrowed money because I wanted my account to be like $10,000, my initial seed fund to be
Mm.
$10,000. So I went and borrowed another $6,500. I put it in there, and that doubled in the next 4.5 months. And I had already taken out all of my seed money, basically. So right now I'm working on house money.
Gotcha. That makes sense. So it's the investment. So the question, right? We're at different levels financially. We're at different levels of disposable income and money available. How much of an investment initially would you say we have to input? Because you put in 920, then 6,500, and it doubled. So at what level? What would you suggest? And is there like a percentage or anything?
Well, the company has different levels, and see, this is what's different about this company. There are most of the investment companies that you have to be a vetted, a vetted investor, and basically they're talking about $5,000, right? But with this company, they cater to people who don't have that kind of money. They say, if you start out with $500, then your money can still grow, and you want to put money in every week, great. If you don't, just let it sit there and grow and compound it. And that's the key,
Mhm.
is it
Mhm.
compounding those funds instead of taking money out every week. You're rolling it back in. And if you don't need it, just keep rolling it back in, and it grows so much faster. So that's the whole premise behind this, is that you're compounding every single week versus at the bank where they give you an APY, your
Yeah.
annual
Yeah.
percentage rate. This is a
Mhm.
WPY. This is a weekly percentage rate where you get a weekly return on your investment, and the average has been like 3% a week
3% of your investment is returned back to you.
every
So
week.
I know you're going to get into it. I don't want to ask too many questions because you know me. I'm
Yeah.
ready. I'm like, okay, let me I'm doing it all in my head. And you said my magic word. You said my magic word, which is compounding, because that's how I got back on my financial assurances journey. And
Mhm.
that's how come the book, The Money Plan, came about, because I realized if you can compound, you can make money.
Yes.
If you can plan, you can enjoy your money. If you want to really have the liberation that she's talking about, it does require for you to listen to the whispers that are going on and not start listening to the whispers that's telling you, oh, you ain't got money for that, or that's a scam, or this isn't going to work, or investments, I can't even pay my bill. When you get into those type of conversations, that's when it happens. And
Mhm.
again, this is just a conversation. You are not obligated in any way to participate. It is information for you to use, whether it's today or 5 years from today. But you want to keep conversations around you about your money, because your money is a social currency. Your money likes to circulate and grow. Your money is a tool, and it's best for you to leverage it the best way you can in multiple opportunities, right? Just what, like she said, the banks are doing it, your jobs are doing it, right? Your communities are doing it. The state, the government is doing it. So why not you? Why not you take a moment to invest? So Vivian, I'm going to let you just kind of keep talking about this process with me. I know you said you wanted to share some visuals with us to give us some more clarity around this topic, and I'm looking forward to taking my notes. As I said, I got 2 pens. It sounds like it's something. 3% may not sound like a lot, but if you think about, if for every dollar, what is that giving you? 30 cents on every dollar? Is that it? 3 cents on every dollar?
For every $1,000 you invest, or for every day you invest $1,000, you're getting $4 on a day. Yeah. So if you think about it, what does the bank give you? $4 a year. Yeah. If you put in $1,000 in the bank, you are not going to get $4 for probably like 2 or 3 years. I had
and again, this is a long game. Would you say this is something we should be doing? Just jump in, jump out, or should we try to put in some time?
I would say put in some time. You got to have a plan, though. Just like you in the money plan, you got to have a plan. Once you invest in this, you got to have an extraction plan. You want to see, okay, well, what am I using this money for? What is it going to do for me and my family? And what is the time frame in which I want that to happen? And so that's how you make your plan. Everybody has a different plan. Like when my money doubled, I pulled it out and I put it in something else. So, you may not be that. You may say, I'm going to put that money in there. I'm going to leave it there for 5 years, or I'm going to leave it there for 3 years, or whatever it is that your plan dictates, because it's all about, what's right for you and your money.
Absolutely, positively. Well, I'm going to let you take over and share more details about, I think this is something that we all need to hear. So I'm going to let you go ahead and take over the screen. Okay. So when you're ready, you let.
All right. Well, I'm going to share with you guys a video, and hold on. A PowerPoint. So hold on. Let me share screen. Okay. I'm going to share the screen. And you're going to see my whole screen now, so you see how messy my desktop is. But I want to share this information with you. So let's go. I'm going to start this slideshow, and then I'll just go over each slide as we go along. Okay, so we're going to start this from the beginning. All right. So as Marrian told you, I've started my own little company. It's a company, but it's an informational company, basically. I am getting more into investments. And because of that, I developed this thing called Whisper Wealth Investment. So whenever I have an investment, I'll vet it before I share it, and then I put it on my website once it's built. The website is not built, but I am sharing this information with you guys because I'm really dedicated. I'm part of this movement to make sure that at least 10,000 families have a passive residual income, additional, other than what they're working for, of $5,000 a month. And I believe that this fund can do that. Now, I want to do a disclaimer in the beginning. I am not a financial advisor. I'm not an employee or principal of Novatech FX. I'm only an affiliate. The information that I'm sharing is used for entertainment purposes only, or visual purposes, dream purposes only. Now, these are scenarios. It's going to help you think creatively about what you want to invest your money in, and how it could actually help you achieve certain goals. Say you want to buy a house, a car, you want to pay off something. How are you going to do that? So I'm going to show you how to do that. Remember that past performances cannot determine future returns, and it shouldn't be considered as a guarantee of any type. We are not guaranteeing you money. But like I said before, on average, this company has returned 3%, on average 3% a week. Could be more, could be less, but that's been the average over the last 4 years. There are also no promises of fixed returns or guarantees of income whatsoever when you invest in anything. You do so at your own discretion and the amounts you're willing to forgive if you lose it. Now, I'm going to go to this video. It's going to go straight to YouTube, hopefully that you can, it'll take us there. And I'm just going to be quiet and let you hear what how this lady explains about and how it is for her and her family. If ever it wants to start. The YouTube video is taking, it's about a 10-minute video, and I'll stop it in periodically.
Vivian, can you hear me? Is there a
Yes, I
place where
can.
you can see where to add the sound? So when you were checking to log it in, it should have given you an option to say share sound.
It did not. Hold on a second. Let me go back and see.
I'm just going to take it from the screen.
It might have.
Thank you, everybody, for joining us tonight.
Okay.
We're talking with Vivian Everett. She's making an opportunity for us to share. I know, we're trying to take care of the sound issue. Thank you for your patience. She's sharing with us an opportunity. In the money plan, we talk about being able to diversify the ways in which we spend, attract, and grow our finances and have financial assurances, not just in one space, but also in multiplicity. If you send me the link, I can also try on my end as well. If you copy me the link of the video, I'll put it over here and see, can I get it? But we're talking about this with Vivian. She's talking about ways to invest. It gives you about a 3% return weekly on your products. There is a minimum investment. She's going to walk us through that whole process, but don't tone out because you're saying, I don't have money to invest today, because information is timeless. Information is timeless. Process is timeless. We're still putting one foot in front of the other since we became Homo erectus as human beings. So we want to begin to utilize this knowings, these opportunities, and push past all of the chaos, all of the zigzag noise that is around us regarding us choosing to be liberated financially and having a plan for it. Wealth does not occur because you don't have a plan. You will never escape the level of financial places where environment you are right now if you continue to do the same thing. So you want to continue to have this conversation. We want to continue to look at multiple opportunities. We want to continue to re-stratify ourselves to the things that are beneficial versus those things that are non-beneficial. We want to begin to reconstruct our lives, our vocabulary, and our communities so that we can gain the most. We can, most people want to stop at abundance. That just means you recognize there's a lot of something. There's availability of something. This money plan is written with the intention of you being able to implement some hands-on real strategies, get the support you need, identify resources to further you along, and then implement and benefit. That's what it's about. That's what it's about today. It's not about, oh, I don't have it, or I'm not used to it, or that's a scam. The moment you say, what's a scam, is staying impoverished. What's a scam is working for 32 years to get a check and for them to tell you that you're retirement and that you're going to get your retirement, but you have to get it in the way in which they want you to get it. What's a scam is when they tell you that you're paying 15% of your income into Social Security, Medicaid, and yet you can't access it until they tell you to access it. So these conversations here in the Money Chat get me excited. My mother says, she said, calm down, right? So I'm calming down, but I'm passionate about this because once I realized the holistic process of obtaining of life, of harmony and expansion, and understanding that most of us don't like math because math was associated with money with us. And that association makes us not exactly, or your retirement has depreciated. I like that. I'm going to put that comment up. Absolutely, positively. You know, it has depreciated and we can't do anything about it. Oh, well, too bad, so sad. So when we are moving toward our own independence, we have to remember there are going to be some growth pains. There are going to be some things we don't understand. We're going to use some languages that sound foreign to us because we've been excluded. I was going to make another point, but I forgot. Okay. And it's okay because I was getting excited, but I get excited because I know this is real. I'm going to tell you my story in less than 30 seconds. I was married. I got divorced. We lost everything in the process. I fought for 3 years to maintain the lifestyle that we had with 2 incomes for 3 years. A tenured degree person was working in a warehouse from 4 a.m. to 12 in the afternoon, plus working her day job at the university, teaching. And then one day it just hit me. What are you doing? What are you doing? So then I'm a master manifester. So I began to say what kind of house I wanted that can be in my budget, that I can enjoy my children, and it began to manifest. I began to meet people haphazardly that were giving me information. I began to watch things on YouTube. I began to listen to programs on that AM station that we don't like to listen to, but yet you get the information. I began to spend time in the bookstores, reading the books, not paying for them because I couldn't afford it at that time. I'm using the language y'all know what it means when you can't afford something. So we don't like math because math is associated with not having money, not being able to afford something. Those stories, Billy has $12. He goes and buys something for $2. How much? In our household, we was like, Billy ain't buying nothing because Billy got $12. Mama taking it. Okay. So Vivian, are you ready, my love?
Yes, I believe so. Hopefully that I
Okay, I'm going to let you pull it up. I'm going to pull it up. Thank you all for joining us for the Money Chat, and you are welcome. Thank you all for joining us for the Money Chat, and you are welcome. So I think we're ready. Go ahead, Miss Vivian. Go ahead, Miss Vivian.
All right. Okay, so I'm going to share. All right. Let me play.
And so it is time
if y'all can hear this.
Think about diversifying and taking it very seriously. In terms of Novatech, we were astounded by the fact that there are professional traders that will do the work for us, so we don't have to do any heavy lifting. We don't have to be the people that have to spend every single waking hour learning this industry because we won't know it all. People will do it for us and trade on our behalf. And so when we looked at that and then we understood compounding earnings, which is what I'm going to talk about in just a minute, it was a no-brainer. When you see the potential that you can have for yourself and your family financially by diversifying in this space using Novatech with the power of compounding your earnings, it is absolutely something that you have to take seriously. So before we get started, I want to share with you this tool called the calculatorsite.com, which is going to help you understand what I'm talking about when I use the term compounding earnings. I never heard the term before. Some of you may have never heard the term before, but it's real and it is absolutely something to pay close attention to. But I'm going to share my screen and get you hopefully seeing what I'm seeing with this. Let me get rid of this and show you that. Can you see the calculator, Sam?
Yes.
Okay, great. All right, so this site is called thecalculatorsite.com. It is not a part of Novatech, so I'm going to give you a disclaimer and let you know that what I'm about to share with you is not a part of Novatech. It is not indicative at all of future earnings. It is simply a tool to help you understand the power of forecasting what your earnings can be. So what I mean by that is, just like any other investment, we are investing in the crypto space and in the Forex trading space. And this allows you to understand what your investment could look like based on the returns that we're seeing. Right now with Novatech, we're seeing on average a 3% weekly return. Let me say that again, a 3% on average weekly return. So you can go to the site at your leisure. It's called thecalculatorsite.com. What I'm going to do is show you two examples, because when you get involved with something like this, you need to kind of understand where to get started. We make it known that there's a place to get started for anyone who wants to join, meaning you can start anywhere that's comfortable for you financially. But let me just share with you, if you were to invest $1,000 as a starting point, using 3%, as I mentioned, on average, the return that we're seeing with Novatech, we're also seeing that weekly, as I mentioned as well. We are talking about a 5-year plan, because this is not a get rich quick. I want to be very clear with that. This is about planning long-term for yourself and your family so that you can have a nest egg to leave a legacy and live comfortably, right? So it's not about anything that's going to happen short-term. This is not what this is about. So I'm going to change that to weekly, and then I'm going to calculate what this $1,000 could look like on a 5-year plan. So what this shows you all is a $2.1 million portfolio with a $1,000 initial investment. So if you see the screen, you can see that it says $2,176,097.87. This is the projected forecast of your money. So how that breaks down, if you can see this, your initial investment is $1,000. Every week, you're going to get earnings at a clip of 3%, a 3% return every single week, which will accumulate in that first year to $3,650. Added to that $1,000 initial investment, by the end of year one, your portfolio has now grown to $4,650.89. Pretty good for not doing anything, right? We're talking about setting it and forgetting it, with the exception of just reinvesting those earnings every single week. If you keep it going, again, long-term play, by year two, now you're compounding at $16,979.85. So you can see your investment growing to $21,630. That is 74 cents. That is pretty amazing. But as I said, this is a 5-year plan. So go down to this 5-year mark. What is this showing you? A $1.7 million compounded return on your investment for a total of $2.1 million. If you can't get excited about that, then I don't know what to say, because when my husband and I saw that, we said, we are in. We are in. And the beauty about this is that your $1,000, if you wanted to, it's like a bank account, a savings account. You can add money to it as you see fit to move this compounded return even faster. So just quickly, you can see it on a monthly basis, so you know exactly where your forecasted returns could go each and every month. I like to show the 6-month area here, which is what I call the sweet spot, because if you're not sure and you're a little bit risk averse, by 6 months in, you have doubled your return, your initial investment, and actually made your money back. So that should give you some calm and some, satisfaction to know in 6 months you can actually get a complete return of that $1,000 investment. So let me show you another example. I'm going to show you $2,500. This is where my husband and I got started, because this is the sweet spot. This is what we were advised to do, because our mentor got started at $2,500 and his mentor got started at $2,500. So the $2,500, again, using a 3% return, which is the average of what we've seen since the inception of this company. And those returns are happening each and every week. Again, 5-year plan, compounding weekly. I'm going to calculate this out. Hopefully y'all see this number. $2,500 initial investment one time. What does this say? $5.4 million. $5.4 million. So let me break that down for you. One-time investment, $2,500. Each and every year, you're getting a return on your investment, compounded each and every year leading up to the 5-year mark. So year 1, you have compounded your return to the tune of $9,127.21, growing your portfolio to $11,627.21. Get excited about that. But even by year 3, I mean, this is a drop the mic. $197,000, $428.41 is compounded against your initial investment of $2,500 for $250,000 sitting in your account. So by year 5, everybody, what can you do with $5.4 million? What can your family do? When we saw this, we immediately said, okay, let's think about this. Let's start accounts for our children, our sons who are college age. Let's start accounts for them so they can start growing their own accounts and set themselves up to leave a legacy and live life comfortably. So we're excited about this. This is a wonderful opportunity to not just diversify your income, but get in position for this new wealth trend. And so if you understand a little bit of that, we're going to shift gears now and let the meeting naturally go to the next progression.
But I wanted to go to, okay, so I wanted to also go, I'm gonna stop screen share for a second. Still can't. Did y'all hear any of that? Can you hear me?
We heard the conversation. We can hear everything they said.
Okay, awesome. All right, so I wanted to share a few slides with you. It's only going to take a couple minutes, but I wanted to share a few slides with you to kind of give you a better idea of what type of company you're dealing with, and what your plan. You got to make a plan when you go into this thing. You can't just go into it and say, okay, well, I'm just going to leave my money sitting there. I mean, you could, but you really, anytime you make an investment, you got to have a plan on your extraction, reinvesting, or whatever. So I'm going to share my screen again. And go to share, but I want to do this. Okay, so where does the money go? Okay, so when you put your money into Novatech, you are doing so using a crypto wallet. Now, for those of you who don't know what a crypto wallet is, it's a digital wallet where you're using cryptocurrency like Bitcoin, Ethereum, Litecoin, and these are the only ones that Novatech deals with, and USDT, which is TRC, which you'll find out about that at some other point if you don't know what I'm talking about. It's called a PAM account. Now, what is a PAM account? It's a percentage allocation money management account, because what Novatech does is they're managing your money similar to what the bank does. They take your money, they trade it, but the difference between your bank and Novatech is that Novatech gives you profits every single week. The bank may or may not have an interest bearing account. So if you have an interest bearing account, usually you're getting an annual percentage rate, meaning that if they're giving you 0.001%, which is the average these days, then you will get that at the end of the year. Now, prime example, when I joined Novatech, as I told you, I put in $920, but I had more than that in my bank account, right? And I compared what I got in my first week in Novatech and what I got for the entire year in my bank. My bank gave me $1.17 for the entire year, which I had triple, well, actually 10 times more in my bank than I had in Novatech. And Novatech paid me on $920. I got $34 that first week. So if you're talking about 30 times my money I got in Novatech in 1 week, what my bank gave me in a whole entire year. So when somebody's managing your money like that, I would say, like the lady kept saying, it's a no-brainer, because somebody that can manage your money and give you a return on that money every single week, then I was in. Okay, so what I want to do is kind of do the same thing that she did, but I want you guys to kind of give me some numbers. And if Marrian, you can see, I can't see the chat, you can. If you can give me some scenarios. Well, actually, you know what? I'm just going to go through with this first before I do that, and then that way I can see it myself. Okay, so what this is saying, withdrawal scenarios. So you're going in with the plan. Like my plan was to take out my initial investment in 6 months, because that's typically when your money doubles in there. But for me, it doubled sooner because there are other options where you can increase your money, that you can scale your money within Novatech, and I'll tell you about that. But it's not necessary, but it can make your money grow faster. Now, the scaling with the PAM account. There's going to be a way to organically scale and systematically scale your account. The systematic way is to compound. Now, Novatech you can manually compound, or you can do automatic compounding. Basically, you turn on a button, it compounds it for you every single week. You can scale organically, which is you can invite other people to the fund, which at that point you would get bonuses. It is not based on their money. There are accounts out there, like if you invite people to invest, that they take whatever they give you out of that person's money. That's not the way Novatech works. Novatech gives you the money out of their profits, and that way it's a bonus to you as an affiliate. And now, as Marrian told you previously, I've been in affiliate marketing. Basically what an affiliate is that they tell other people about other people's products, and they get paid a bonus, and that's what that is right there. So we're going to be increasing your education and evolution. Now, we have a Facebook group full of our investors. Then the gentleman that introduced me to the fund, he is the leader of that group. He is like a master of investing. He's been investing for 20 some odd years. He was in real estate. He's been doing Novatech about the same amount of time as me, because he actually introduced it to me within the same month that he was in. But after, like, I think he had been in like 3 weeks before he introduced it, because he was vetting it. But you are, if once you enter into the fund, you have an informational system that you can get into that will give you information about what's going on with the fund, any changes, and all of that kind of stuff, and also some educational presentations. So here is a screenshot, and I don't know if you can see this because it's kind of blurry, I believe. But this is a screenshot of these are screenshots of some of our investors that are in our group. Now, as you can probably tell, everybody's at different levels. Like I said, Novatech is different in that it's for the common person. It is not for somebody who has $10,000 laying around, or $50,000 laying around, or $100,000 laying around. It is for somebody who needs to grow their money, but they may not have as much money as most common investment vehicles would ask for. So Novatech, you can start at a lower amount. I would not suggest that you start any lower than 500, but you can. But there are ways that you can build that up to a higher amount as well. Just depositing weekly like you would into a savings account. So this is just showing the money that so many people are earning within the fund. Okay, and so what are the possibilities for me? So now I'm going to go to that calculator site that she showed on the previous video. Now, what I want from you guys is kind of put in a scenario. What I want is for you to dream. Dream about, okay, what goals do I have that I want to achieve by growing the money that I already have. Now, if you come in and you say, if somebody would give me a scenario, say you want to buy a house in 3 years, how much money are you talking about putting into the fund to achieve that, and how long do you want to leave that in there? And I can kind of do these scenarios for you. And Marian, if you could help me out and let me know if somebody puts a scenario in there for me.
So to get clarity, you're asking us.
Yeah, so I wanted to kind of do, just to have somebody that maybe they want to see how this fund could help them achieve some goals. And then, it's just based on what you want to deposit. And then we can see how much you would have to, how long you would have to leave it in there to accomplish that goal.
Okay.
So if somebody could, just give me some numbers. Basically, what would be your initial deposit? How long would you want to leave it in there? Are you going to add additional money or not? So $2,000 for 2 years. Okay.
You saw it. Mm-hmm. You saw it. Mm-hmm.
Okay. So as she shared, we're talking about a weekly compound ROI. And are you putting any additional funds in this on a monthly basis? If not, we're just going to see where this takes us. Okay. So in 2 years, we're talking about $43,261.48. That's where you would be in 2 years. So you would basically, when you start out at your $2,000, your earnings, accrued earnings, will be $273.31 for that first month, which would end up for that month $2,273.31. And then after that, your compounding is going to be based on this last amount in the blue column. So when you're looking at the breakdown, you're looking at the balance that you're starting with. That's the blue column. And then the earnings that you earn every single month. And you can do it and see how that looks like. For that $2,000 in the first year, you would have $7,301.77 in earnings. And so your total after the end of the first year be $9,301.77. So whatever goal that you're trying to accomplish, basically you would use this calculator as a guide. Now, as she said before, this is not a tool. This is just a Forex compounding tool, because Novatech, the way they earn the money for you is they do Forex trading. So, anybody else got a scenario that they want to do? I don't have a scenario. I'm more interested in the platform and how it functions. So the platform, and let me see if I can, hold on just a second. And can you clarify what you mean by the platform and how it functions? Okay. So for the person who asked, I wanted $10,000, how long would it have to be in there? As you saw, for that $2,000, you would basically be the first year, because you would be almost there within the first year. You $177 that first year. So if you break that down on a monthly basis, within 13 months. Okay, so for the person asking about the platform, okay, let me do this. Let me show you. Hold on. Let me stop share. No, I'm not. I'm not going to stop sharing. I am going to go to not that. Trying to figure out where I'm going here. I want to pull up the actual login. Okay, so Novatech is, it has a website just like any platform that you would see. The way they earn money is through Forex trading. So the fund, and they hire some of the best Forex traders out there. They vet these people to the nth degree, and they make them take tests before they are able to trade for this company. And they are conservative traders, meaning that they're not promising you $5,000 tomorrow. They're saying, we will trade all week for you. And at that point, then at the end of the week, so they start trading on Sunday and they end that trading on Thursday evening. Friday is when we get paid. Every single Friday we get paid. So you would go into your account and you would see your ROI. Now in my account, you're not going to see my ROI because I've already compounded it. I also have other people in my portfolio. So at the beginning, like I said, I started out with 920, and then I invited other people to the fund. So my portfolio is over $260,000 just in since February of last year. Now my personal account, as you saw, was only is 13,000, but that's because I've already taken out over $8,000. So just to be clear, you can grow your account as quickly or as slowly as you want. Um, Simply compounding your initial investment is, just rolling your profits back in. But you can become an affiliate and invite other people and get affiliate bonuses that will grow your fund faster if you roll it back in. Or maybe you want to use your affiliate bonuses as, some play money. Whatever you want to do with that, you can do that. So that's how that works. Is there a minimum requirement? No. No. Well, yes. The minimum requirement is $99. I would not suggest anybody start with $99. So they have different packages. And they're called enrollment packages, right? So once you enroll into the fund, you can choose either one of these packages that you want. Now you can just be an affiliate and have an affiliate license for $50. But you won't have a PAM account. Your $50 is not going to grow. That's just somebody inviting other people to the fund. Now you could use that money to, go into one of the other packages, but you can start as little as $50 if that's what you want, if you want to be an affiliate. And the reason they name these different packages what they are. Now, the builder packages is just that. So if you start out at $99, that's between $99 and $499. Now, the way that works is because your fund cannot go less than $99. You will be kicked out of the fund. Anything less than $99 in one of the PAM accounts is not beneficial to you. This is why I say start at a $500 one. Now, you can start lower than that, but when you do that, you want to keep putting money in on a monthly basis because you have a $25 fee per month to manage your account up to $25,000. So once you reach $25,000, that monthly service fee is waived. So once your account, even if you're just compounding, once your account reaches $25,000, that monthly service fee goes away. And you also have access to learning how to trade on this platform because they are licensed brokers. They have their own brokerage, meaning that they have a platform on which you can trade. So, and then they also have traders that can teach you how to trade. So I'm going to stop sharing now and answer whatever other questions that you might have. If that's okay, Marrian. Okay, so all I see is Facebook users. So if you can just send me a message or on Messenger, or you can send me an email or call me or whatever, you can give me a call and we can talk about, how we can make this work for you. FOMC notes. What's the FOMC notes? I don't know what that means. Absolutely, we do need multiple streams of income in this economy because, having just one stream of income and depending on that pretty much doesn't work out anymore. Used to be you could have a job and you were pretty secure in it. Federal Open Market Commission. Okay. But nowadays, if you don't have at least, most wealthy people have at least 9 streams of income. Now, I'm not saying that that's what you want to do, but I have 6. So I'm working to be like the wealthy people. I want 9. so so I want, and Marian has really helped me in that money plan thing, because I take that money plan challenge that she initiated, with the $6 a day plus the day of the month. That really works out to a, to a good chunk of change that you could actually put into this account and just let it grow, and then you can put some more into your savings. Do it and keep doing that every single month, and by the end of the year, you could be solid. Absolutely. So, any other questions I can answer for anybody? Thank you,
Vivian,
Mary, for
thank
having
you.
me.
You might want to turn your volume down. I don't know
Oh,
what's
my volume
going
is
on.
up. Uh-oh.
Yeah, maybe
Oh, I
that's
gotta
what's
change. I
happening.
gotta change my thing back because the audio.
Okay.
Okay.
I gotta.
Well, I want to thank everybody for being here and supporting us today here in the Money Chat. As we said, this is a new series that we're going to be starting in 2023, because many of you have already stated that you understand the importance, of the very much the importance of what we're doing here, right? It's about us falling into the liberating reality of having your finances into assurances. And I just want to talk about something Vivian mentioned about, I'm supporting everybody with the money plan and my process. I want to go back, and I want to give a privy to something that she said. When we talk about having multiple streams of income, you need to make sure your first stream is working. And then when the second one comes, that the second one is working before you go dipping and dapping. Sometimes people think that multiple streams of income means you're just throwing money everywhere, but nothing is producing. You're just dragging money in, and there's no return. So our goal is to invest in assets that appreciate. And if it's going to depreciate, you got to have you a good CPA, certified public accountant, that can manage and show you how to leverage that. Right. And you have to make sure that your multiple streams of income, I mean, for you, maybe $100 every month from your multiple stream, one of your streams is okay. But for me, that ain't going to get it. So, it's really important to be disciplined. I want to emphasize that. Anything you get involved in, you need to be disciplined enough to listen, to apply, and continue to research and work with people. That's why I said building that prosperity community. Absolutely. You have to be secure in where you're working. You have to be secure. Y'all can read the book. Y'all know, if you've been around me long enough, you are aware of my journey financially. And I'm telling you, it started with me just being committed and disciplined to saving, $20 out of every paycheck. Don't touch it. And then taking it and investing in a way that I could get the returns. So there's a lot we're going to be learning here in the money plan. The book is available online. You don't have to buy the book. You don't have to pay a fee to be part of the money plan group. You just need to come and give us a little bit of your time and put some effort towards your financial assurances plan. That's it. That's it. Because the reality is that money is not paper money anymore. Money is investments. Money is land. Money is real estate. Money is your cars, your jewelry. I got somebody coming in to talk about what type of jewelry and purses we should, come on, y'all. What type of jewelry and purses we should be investing in. Now, I'm going to tell you about somebody who really got me thinking about this maybe 2 years ago, was Jay-Z, when they said he reached $1 billion. And the young lady on the video talked about having $5 billion in 5 years, or $5 million in 5 years. But listen, Jay-Z bought a piece of artwork. He bought a piece of artwork, and the artwork helped contribute to his wealth, his net worth, getting him close to $1 billion in assets. What y'all talking about? What y'all talking about? I remember my friend was sitting next to me. I was hanging out with them, and his report came in. They said he had a liquid net worth of $11.7 million. Just if he was to sell the things that he could sell, he would minimally have 11 billion at that time, and that was a long time ago. That's why he my big brother. All right. Make sure you are focusing in. Follow up with Vivian. Her number is scrolling down at the bottom. We're here every Monday night. Next week is going to be Anita Johnson. But I want y'all to continue to tap into what Vivian is saying. Have the conversation. Maybe you can't do 920. Maybe you have to, for the first 2 months or 3 months, only put in 99 until you get to that, to get to what it is, right? But you got to make sure. Absolutely. You got to watch the yes to everything. You can observe it. You can store it in your files and you can use it for another time, but you got to know when is the right time for you to get in and when is the time for you to get out. Okay. Miss Vivian, I want us to keep going. You know, I get to talking. I love talking about stuff that's going to take us and give us liberation, not give us free, but give us liberation. Right. So I want to ask you this final question, right? Because I'm asking everybody this question. We know we're in the money plan. We know we're about liberation. How does this product, how is it relevant? How does it support us implementing what we learned in the money plan group?
Well, it supports it because it enhances what you were talking about. You're talking about exponential growth, right? And with the money plan challenge that you issued with the $6 a day, that people are, like the young lady you talked about before, are surprised that they have that much money. Oh my God, did I not pay a bill? No, you just did what you needed to do to grow your wealth. And what this does is it takes that wealth, that money that you saved, and it can increase it exponentially. So you're all about exponential growth. We're talking about passive residual income, something you don't have to work for. You just put it in, watch it, let it grow. And so that's it's gonna also contribute to your good money habits, because you're gonna have to pay attention to what you got going on with, like I was talking about with the plan. You go in with the plan. You think, what am I gonna be in 6 months, 2 years, 5 years, whatever it is that you plan to do. That's the connection to the money plan that you put out. I can't hear you.
Excellent. And thank you so much for doing that. I just was worried about the feedback, but I want to thank you again, Vivian. That's exactly it. This is an option that you can incorporate. When we did our gap analysis and our net worth and our projects, this would be a line that would be there as an investment. And again, it's not that you're going to just snatch it back out as soon as you see your three for your stuff double, but you want to be able to say, okay, maybe I'm going to take half of that. It doubled. Let me take half of that back and see, can I put it someplace else? Because I wasn't expecting it. Now you can begin to reduce your debt. Now you can begin to upgrade and then do some other things that you want to do, give you a little breathing space. Maybe you call in to your second job after 3 or 4 months because you realize this is one of the consistent ways in which you can improve your income. Mm-hmm. All right. Vivian, any final words?
I just want to thank everybody for coming and your interest in the fund. Also, I want to thank you, Marrian, for allowing me to share this with everyone, because like I said, one of my goals is to be part of this 10,000 family project, where we want at least 10,000 families to have passive residual income of at least $5,000 a month in additional income. So this is part of me sharing, and I would hope that you guys would share it with people that you know as well, because this is important that people have passive residual income, something they don't have to work for. Because I worked for 32 years. I don't want to work no more. I'm just saying. I do work, but I don't want to. I want to, I want something that comes in every month, whether I'm working for it or not. So I want to provide that opportunity to other people as well.
Excellent. Thank you so much. And I am honored also. And thank you for stepping up. And this is also available to those of you who also have other opportunities. If you want to share your success stories, if you want to share something that has really benefited you in your journey for financial liberation and creating financial assurances, please reach out to me. Vivian's information is scrolling down below. You can reach her at the phone number of 954-635-7740, or you can email her at the whisper of wealth 60 at vivianeverett.com. She's also on social media, so you can also find her on social media. I think this is a great conversation, Vivian. We may have to continue this conversation differently. But definitely this is something for us all to continue to look at all options. Even if you can't do it right now, you can learn about it, right? You can dream. What did she say? Come on, dream with me. Share your dream. Go ahead and go to that place. The imagination is a beautiful tool. All right. I will thank you guys for being here. Have a continued great week. And we'll see y'all again on next Monday for the Money Chat. Talk to you soon.